My dear friends and students, welcome to the class on Introduction to Consignment. What is consignment? It is a process, it's a kind of sales where goods are sent from one place to another place by one person to another. The person who is sending the goods is known as consignor. The person to whom the goods are sent is known as consignee. Okay, here the relationship between consignor and consignee is principal and agent. Consignor is the owner of the business, so he prepares three kinds of accounts in his books. The three kinds of accounts are like consignment account, consignee account, and goods sent on consignment account. Consignment account is a nominal account. There we can find out what is profit or loss made on the business. And consignee account is a personal account. How much advance he has given, how much still we have to receive. Here, consignee will also prepare one consignor account to find out how much amount to be given to him. Here, the unsold portion of the goods by the consignee is known as closing stock. At the time of valuing the stock, to the value of the stock, we need to add non-recurring expenses. Non-recurring expenses means the expenses which are paid by consignor at the time of sending. Then some expenses paid by consignee like loading and unloading, insurance in transit, and octroi duty. Then this should be added at the time of valuing closing stock. Sometimes the consignor will send goods at invoice price. What is invoice price? Sending the goods at selling price. For example, if the cost is like 200, he may add 50 rupees profit or 60 rupees profit, and he can send the goods at 260 or 250 like this. So there may be a choice of happening normal loss. There are some goods like coal and any oils, they may lose their value at the time of loading and unloading. That is known as normal loss. For normal loss, there will be no further valuation. But in case of abnormal loss, like fire accident, if something was happened, that is known as abnormal loss. If the goods are insured, the insurance company will pay insurance to it. Abnormal loss will appear in the credit side of consignment account. Then the consignor will write the following journal entries. Number 1, when goods are sent, consignment account added to goods sent on consignment account. Then for payment of expenses, consignment account added to bank account. Then for receiving advance from consignee, bank account added or bills receivable account added to consignee account. For expenses paid by consignee, consignment account added to consignee account. For commission payable to him, consignment account added to consignee account. Then for sales made, here consignee account added to consignment account. For closing stock, consignment stock account added to consignment account. Rather than this, we need to write some more entries like for calculation of the profit. For profit, consignment account added to profit and loss account. For transferring goods and consignment to trading account, goods and consignment account added to trading account. For receiving the balance, bank account added to consignee account. Here we need to learn about account sales. It is a letter sent by consignee to consignor stating the particulars of the sales made by him, and whatever advance he has given, whatever the balance sheet he has to give. Pro forma invoice means the letter sent by consignor to consignee stating at what price he should sell the goods and what is the nature of the goods, how to handle the goods and all. Then non-declaratory commission means it is extra commission paid by consignor to consignee for accepting the risk of bad debts. If any bad debts arises, the risk is to be borne by consignee himself. My dear students, make use of the class. Consignment. Consignment is nothing but it selling of the goods by sending from one place to another place. There are two parties in consignment like consignor and consignee. I wish all the best to my students. This is consignment. Listen, learn and write well. Prepare well.